Welcome to this explainer. I'm so glad you're here. We're going to dive right into an absolutely fascinating teardown today. We're looking at Okta's massive Q2 earnings report. But listen, we're not just going to sit here and read financial statements to you, right? We're unpacking the real story. The shift happening under the hood at Okta is literally one of the most underappreciated stories in tech right now. And by the end of this, you're going to understand exactly why Wall Street is watching this so closely.
So how exactly do you secure something that isn't even human? I mean, that is the trillion-dollar question, isn't it? And it's the exact question Okta just answered with its Q2 earnings. For the longest time, cybersecurity and identity management, it was all about making sure you, the actual human at the keyboard, were exactly who you said you were. But that landscape is totally fractured now. The future isn't just about human users anymore. And honestly, how a company answers this specific question is going to dictate their survival in the next decade of software.
And wow, clearly the market believes Okta has the answer here. Right after their Q2 earnings dropped, the company reported its best quarter in 2 years. The stock had its best single-day performance ever, just popping nearly 29%. But as you'll see in a minute, the real story isn't just your standard beat and raise quarter. It's actually a fundamental shift in what Okta is selling, and exactly who or what they're selling it to.
Here's our roadmap for today's explainer. First, breaking down the numbers. Second, the AI growth engine. Third, valuation and key risks. And finally, the final verdict. All right, section 1, breaking down the numbers. Let's look at the core Q2 financials that got Wall Street so excited. We got to start with what everyone always looks at first, right? Top-line revenue. Q2 revenue came in at a massive $805 million. That's an 11% jump year over year. But here's what's absolutely crucial. It was a super clean beat over consensus estimates by $12 million. And in today's tricky macroeconomic environment, a clean, totally uncomplicated beat like that is exactly what institutional investors are just desperate to see. Then, moving down to the bottom line, earnings per share hit $1.05. But the context is what's really interesting here. The consensus estimate was only 96 cents, so Okta didn't just barely scrape by, they comfortably smashed expectations. That shows some real operational leverage and serious profitability right alongside that revenue growth.
But if you're looking at a software as a service, a SaaS company, this is the metric that truly matters: remaining performance obligations, or RPO. This figure hit $48.6 billion. Now, if you're not super familiar with RPO, it basically just represents contracted revenue that hasn't been recognized yet. It's the pipeline, right? It's future stability. Hitting $48.6 billion is a 17% year-over-year jump. The big takeaway? This backlog is accelerating fast. Customers are locking in with Okta for the long haul, and those commitments are actually growing way faster than recognized revenue.
And that pipeline really explains the confidence we're seeing from management. They actually raised their full-year revenue guidance to between $3.216 and $3.226 billion. Keep in mind, this is the second time this year they've raised guidance. When a company bumps up guidance consecutively like that, it sends a crystal clear signal. Demand isn't just holding steady, it's actively building momentum. The headline from these numbers is pretty definitive. Growth is re-accelerating. But to understand the why behind it, we gotta look a bit deeper. Which brings us to section 2, the AI growth engine. We're pivoting from the raw numbers to the actual technological catalyst driving all this. Okay, this is where the whole narrative really shifts gears. Just listen to this quote from Okta's CEO. AI agents will reshape every technology layer, and every single one will need a trusted identity. That right there, that anchors everything we're talking about today. We are moving away from a world where identity software just secures, human users typing in passwords. We're entering a reality where infrastructure has to secure autonomous software.
So let's break down what this actually means on the ground. Okta for AI Agents provides access controls and security policies designed specifically for autonomous software bots and tools. Think about your average modern enterprise today. You've got customer support bots, automated coding assistants, AI financial tools just constantly crawling through data. Every single one of these AI agents needs specific permissions. They need access controls and really strict security policies so they don't, say, accidentally leak proprietary data or completely break a system. Okta is aggressively stepping up to be the central gatekeeper for this entire non-human workforce. And this isn't just some futuristic sci-fi pitch, it is happening right now. In Q2, a mind-blowing 30% of Okta's total orders came from this new Okta for AI Agents product line. 30%! That proves AI security is a massive growth driver today. It's almost a third of their total orders for the quarter, not just some vague promise for 5 years down the road. To make this even more tangible, let's look at a couple of real-world use cases from the quarter. They closed over a dozen AI-specific deals. One was a massive multi-million-dollar contract with a healthcare company deploying AI to process highly sensitive patient data. And another one, an energy company brought in Okta for their AI agents and instantly bumped up their spending by $1.5 million. I really want to stress this point. This is not just an incremental upsell on an old product. This is entirely new revenue coming from entirely new use cases. And management flat out stated that fiscal year 2028 and beyond is the major monetization window here, so we are still incredibly early to this party. All right, Section 3, Valuation and Key Risks. It's time to put on our analytical hats and weigh the hype against reality. We absolutely have to talk about the elephant in the room. The price tag. Okta currently trades at a trailing price-to-earnings ratio of 97. The forward PE is sitting at 35, and the PEG ratio, which factors in the growth rate, is at 1.28. Plainly speaking, a ton of future growth is already totally priced into the stock. At these multiples, especially that forward PE of 35, the market is essentially demanding perfection. It leaves them almost zero room for error if they stumble even a little bit on execution. Beyond just the valuation, there are a couple of other risks we've got to acknowledge. First up, insider selling. There's been over $21.8 million in stocks sold by executives over the past 3 months. Now, to be totally fair, executives sell for all kinds of reasons, usually just tax planning. So it's not automatically a huge red flag, but, it's definitely a dynamic worth keeping an eye on. Second, the competition is brutal. Microsoft, Ping Identity, plus a whole swarm of these nimble AI-native security startups, they are all circling this exact same opportunity. The AI identity space, it's going to be a total battlefield. But we do have to balance those risks by looking at Okta's defensive moat. Like, why are they such a formidable gatekeeper? One word, scale. Okta has over 18,000 enterprise customers, and they've got these incredibly deep, complex integrations across thousands of different apps. Think about it. It is incredibly painful and expensive for a massive enterprise to rip out their core identity infrastructure and start over. That stickiness, combined with their sheer scale, gives Okta a massive, massive head start against the newer startups. That brings us to Section 4, the final verdict. Let's synthesize all this data into some actual takeaways for you. Let's check the pulse on Wall Street. The overall analyst consensus is a buy, with an average price target of $177. That implies roughly a 10 to 12% upside from the post-earnings levels. Truist Financial is super bullish, putting a $200 target on it. RBC Capital raised theirs to $195, and they specifically called out this AI-driven expansion as the reason. Even Bank of America, who are usually way more conservative, upgraded their stance to neutral and bumped their target up to $170. So if we objectively look at both sides here, the bull case says Okta is successfully making the jump from a mature identity player for humans right into becoming the absolutely critical identity layer for this massive, exploding AI economy. On the flip side, the bear case argues that at 35 times forward earnings, any tiny miss on growth or even just slower than expected AI adoption by enterprises is going to see this stock get severely punished. Ultimately, it's all going to come down to flawless execution by management.
Based on all the analysis, here are your strategic takeaways. First, for the investors, the move is to accumulate on weakness. If the stock pulls back into that 140 to 150 support range, that looks like a highly compelling entry point. Second, if your horizon is long-term, say 3 to 5 years, Okta offers some incredible exposure to one of the most underappreciated parts of the AI boom, the security infrastructure. And finally, for the short-term traders watching, keep a really close eye on that 170 level. If we see a sustained breakout above that resistance, it confirms some serious upward momentum. I want to leave you with one final thought today. Is your portfolio actually prepared for the massive shift from human to AI identity? Because whether it ends up being Okta or somebody else, the autonomous AI workforce is already here. And securing it, that's going to be one of the absolute biggest businesses of the next decade. Thank you so much for hanging out with me for this explainer. Keep learning, stay focused, and I will catch you in the next one.